7 odd points.
128, 130 odd points lower. The bank Nifty is down about 1.25%.
Midcaps relatively better than large caps because at least there was some sign of recovery.
Global weakness dents Dalal Street. Nifty closes 100 points in the red. Sensex barely holds on to 37,800. Midcaps fall a little less.
Investors across the world get jittery on recession signals from the US. Global markets plummet as the US 10-year yield dips. Asian markets see deep cuts with the Nikkei losing 3% in trade today.
CNBC-TV18 News breaks confirmed Naresh Goyal steps down as chairman of Jet Airways and exits the company's board. Lenders are set up to infuse 1,500 crore rupees in the airline. The stock ends the day up 12%.
PSU stocks stand out in an otherwise bleak day. IOC, ONGC, REC and PFC surge. Dealers say the stocks jumped on purchases by the CPSE managers.
Nifty Junior and Nifty Small Cap Index underperform benchmark indices. Metals, Realty and Nifty Banks are the main sectoral index losers, shedding over a percentage. Well, those were the top 5 headlines from Dalal Street on a day when the market saw shares falling to the extent of 4 in the red for 1 in the green. So it was a widespread across the board fall. Welcome to Markets Today Talk Back, the show where we are going to tell you why what happened. All that happened in those 6 hours of trading in 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nayak.
Hi Lata. Over the next 30 minutes, as you said, we will talk about the headlines. We'll take your questions as well. Joining us today to answer the questions are Prakash Devan and our technical expert Ashwini Gujral. Prakash and Ashwini, thanks very much for joining us on the show. As always, before we get to the Q&A part of the show, let's quickly wrap out the markets for you. What happened from the word go? Lata.
Well, in the first place, we were waking up to very negative cues from the global markets, and that was basically what you call this inverted yield curve. Now, what does it mean? It's a very simple thing where a near-term bond yields higher than a longer-term bond. Normally, a near-term loan should have a lower interest rate, and a longer-term bond should have a higher interest rate because of the uncertainty. But what happened in the United States is that the 3-month bond traded at 2.45% and the 10-year bond traded at 2.43. This normally indicates recession. But we began with a little bit of hope because on December 3rd, when a similar event happened, December 3rd, 2018. These are rare events, but they did happen in December. When this happened, the Dow Jones index over the next 3 weeks fell 15%. But the Indian index, the Nifty, fell only 4% and reversed within a week. So while we have fallen today in Tao with other Asian markets and the Wall Street indices, we will have to wait and see whether the shares get bought at dips, maybe 11,100, 20-day moving average. That clearly remains a hope because of the fact that everyone is expecting a strong government after the polls, as well because foreigners have been supporting this market rather strongly in the past few weeks. But of course, that's no guarantee they will continue to. What are you picking up in terms share-wise?
So, I mean, across the board, red, Lata, so no real differentiation. Advanced decline was pretty bleak. 300 stocks higher, 1,300 odd stocks plus lower. So it was an all-down kind of a day. So what was under pressure, sectorally speaking? Media stocks were under pressure, largely led by Z. Real estate, which has done well over the last couple of weeks, was down 2%. The banks, both the PSU bank index and private banks, were also sharply lower, showing up in the Nifty bank. The Nifty losers, Z, as I said, a big cut there. Bharti Infratel, 3% lower. Vedanta, 3.25% cut. JSW Steel, Tata Motors, UPL. I mean, today is just about counting out and reading out the losers, because it was, as I said, an everything down day and more of a pullback after the sharp gains we've seen across the board more than anything else. Nifty gains, oil stocks did well. So IOC, ONGC, HPCL stood out. The top losers from the broader space, Vodafone Idea was down sharply. Edelweiss, I think it's still up from the recent lows, 180 plus, but closed down 6%. Jubilant Life was down 4%. Dish TV, Indian Bank, Bombay Dyeing. There was Cummins India and Delhi Buildcon. Delhi Buildcon, again, something which has doubled from the lows, pulling back a little bit. So just that. Top gainers, Jet, of course, and that's the big story, which we will discuss in some detail a little later. News started trickling in during market hours. Stock was up 15%. REC and PFC were some of the other top gainers by close in a broader market. But as I said, I mean, advanced decline, absolutely firmly in favor of declines today. Nata.
Okay. Yeah, I think the oil marketing companies stood out partly because crude fell. Normally at such times it doesn't affect because it's an overall risk off. But today, as you pointed out, the central public sector units fund had also closed, and therefore any shorting perhaps was over and people were covering shorts because that sale is ended. We will get you more details on that. But first up, let's discuss the indices itself and invite our experts. First, Ashwini, to you, a quick take on the markets. You were expecting to be a buy on dips guy. You were expecting a recovery, right?
Till now, we had been in a trending up move. Now it appears that the market is turning sideways, and possibly the range is 11,350 to about 550. So that way you'll have to play on both sides. But for the moment, given the rally, the market is acting quite well and is not willing to give up substantial ground.
Ashwini, okay, so you have to play both. So for a trader, what would that mean? The ranges mean?
For traders, it means that Friday's high and today's low, those levels become your boundaries, and each time we get to one of the boundaries, you have to take the other side.
Okay, well, we have a special guest joining us now, but let's get to the second headline before that. It's a sea of red across global equity markets as recession fears in the US sour investor sentiment. The Japanese Nikkei lost over 3%. Shanghai, Hang Seng, Kospi, all of them have lost 2% each. Sentiment has been driven lower after the yield on the US 10-year Treasury note dipped to 2.43%, below the yield on the 3-month paper, which stood at 2.45%. This is a yield curve inversion that has happened for the first time since December, when we also saw a brief yield curve inversion. Well, to get us more on this and understand whether this really spells recession fears is Jonathan Schiesel, the Senior Vice President at IIFL. Jonathan, thank you very much indeed for joining us. We saw a brief yield inversion in December as well, but then nothing much happened except that the Fed became very, very dovish. How should we read this yield inversion? Should we see a lot of slowdown in the economy?
Yeah, it's a fascinating time, and obviously, investors and commentators do love it when we get these occasional events. I'm not so sure that every time we see an inversion, it sort of portends, a terrible recession just around the corner. I mean, clearly, back in December when we saw it, a little bit after that, equity markets rallied and sort of, I guess, embraced the Fed's slightly more dovish stance, and obviously more recently, after the extremely dovish meeting last week, we've seen yields really take a dive lower, especially in the 10-year, obviously, and that's around the globe. So, as you say, I think investors certainly are becoming more concerned that these moves in the bond markets are portending a much more significant slowdown to global growth than I think that we've been previously anticipating. My view would be I'm not quite so concerned about that, but obviously markets are taking a different view at the moment.
So, I mean, to your mind, this is just a pullback that we're seeing in global markets, Jonathan?
Yeah, look, I mean, markets had a very, very buoyant start to the year. Obviously, we've seen a lot of move as well into emerging markets as well, as people have begun thinking about, is the peak dollar now, past us? The fact is a lot of emerging markets as well last year, including India, to my mind, had to tighten policy unnecessarily because of what was going on with the dollar and the Fed. Now, we're seeing some of that beginning to unwind, or expectations of domestic tightening in EM beginning to unwind. So Yeah, and when you look at the global indicators, obviously the market is clearly beginning to ease policy globally. So it's doing a lot of the jobs that central banks haven't quite started doing yet.
Okay, so Jonathan, two questions therefore with respect to India, since you brought up the topic. Do you expect the FII flow that started earlier this month and that's become almost $3 billion month to date to continue into India? And, would you yourself be a buyer, or would you worry that Indian economy also is slowing, in part because of its own problems of NBFCs and in part because of global slowdown?
So I think that's right. I think the fact is, FPIs, foreign investors, haven't really embraced India for quite some time. And I think, the trouble is looking at relative valuations of India vis-a-vis other emerging markets or even developed markets. This is a market that's been trading at a fairly decent premium for some time. And what we have missed consistently for the last few years is earnings growth. So it was always you were buying really the expectation of earnings growth coming back. I think now clearly what's changed with foreign investors is when they look around the globe, they do see quite a good prospect for earnings growth recovery in India, and you align that with easier policy domestically as well. So I think foreign investors have taken or had taken quite a lot of their positions off the table in India over the last 2 years. And I think we're at the beginning of a reappraisal of that money coming out. So I would say, obviously the markets have run up very strongly in a very short period of time, but I would expect foreign investors to carry on looking at this market.
Jonathan, there is also some chatter about a slowdown in consumers. I mean, Indian consumption is essentially has been the bright spot a decade and a half, as far long as you can think of it, right? But now there is some talk of some slowdown there. Is it cyclical? Is it more than that, etc., etc.? Does it have something to do with election uncertainty, or do you think, irrespective of who comes back, consumption will shine once again?
Yeah, I mean, it's obviously been the one bright spark of the economy for the last few years, and clearly, there is going to be pressure on that segment with the tightening we're seeing from the NBFC sector. So, availability of capital is going to hold back consumption to a degree. I think long-term investors can clearly see a very significant pathway for strong consumption growth in India for on a structural basis for many years ahead. But in the short term, yes, I would agree. Probably there will be pressure on the space.
Okay, all right. Thank you very much, Jonathan Sheasel, for making this unscheduled stop. We'll of course drill it down to more details in a later conversation. For the moment, the third headline.
Well, CNBC-TV18 told you first, and now it's confirmed. Jet Airways' chairman, Naresh Goyal, and his wife, Anita Goyal, have stepped down from Jet Airways. The lenders are also set to infuse up to 1,500 crore rupees in Jet. The stock skyrocketed to end the day 12% higher. Let's straight away go across to Ritu Singh for further details. We've got lots of new details that we have after we spoke with the State Bank of India Chairman Rajneesh Kumar just a while back. Ritu, what do you really what is the new information with regards to Jet for viewers?
Well, one, that immediately lenders will infuse 1,500 crore rupees into the airline. This will be sufficient to keep the operation running for 2 months. At the end of 2 months, that is by 31st of May, Rajneesh Kumar told us that they're hopeful that there will be a new investor or investors for Jet Airways. It could be a strategic player or a fund or a combination of the two. NIIF continues to remain invested and is exploring options to invest into Jet Airways. Naresh Goyal will have the option to buy back if he is able to bring funds. But what is important is by 9th of April, they've set a deadline, is when expressions of interest will be invited. By 30th of April is when binding bids will be submitted for Jet Airways, and they're expecting to close the entire process by June. Lenders, in the meantime, will continue to hold 50.1% stake. Etihad stake will halve immediately upon issue of these 11.4 crore shares to the lenders, which will double the share capital of the company, which means Etihad stake will fall from 24% to 12%, and Naresh Goyal's from 51% to 25.5%. It will not be capped at that for perpetuity. That is something Rajneesh Kumar clarified to us. But the good news is that, at least for the next 2 months, there is enough capital to keep the airline running.
Okay. Well, thanks for that, Ritu. Incidentally, I think 60% is already pledged, and pledged because of this equity infusion as well by the lenders. So actually, from 25%, he's already halved because there are fresh shares issued to the extent of doubling the total number of shares. So Naresh Goyal has fallen from 51 to 25.5%. And further, because of the pledging, his stake falls actually to 9%. So technically, Naresh Goyal will not be a problem for any new investor because it's actually reduced to below 10% effectively. Prakash, will you buy the share now? Or should anyone buy the share now?
260 is not something very convincing for the risk reward that's available, because my expectation on finally the new buyer potentially coming in is not beyond a reasonable 300 kind of a zone at best. It could probably be even lower depending on how quickly Etihad wants to get away, because that's very clear, I think, after today's meeting and the outcome, that Naresh Goyal won't be an impediment. Etihad doesn't want to own the business. The lenders are probably very confident of getting a buyer who could take on the burden of the existing debt and the new 1,500 crores. All that doesn't come at a very steep price. You are not in a position to bargain and negotiate for a very high price, right? So I think the risk reward at 260 gets a bit. Today's rally was more of a short covering bout, which was significantly sharp because of that. And that's why the next month's future actually at a discount already.
Okay, got that.
Poor day, not just here in India, but around the world. Global growth concerns really affecting sentiment quite a bit. We got through 3 of the top 5 stories of the day, so let's move on to the 4th headline. PSU stock stood out on a trading day that saw most stocks close in the red. IOC and ONGC were some of the top Nifty gainers. Each of them was up 4% apiece. Meanwhile, REC was another one which was 11% higher. PFC, the other one, rallied 5%. According to dealers, the stocks jumped on purchases by the CPSE ETF Managers. Nimish is here with the specifics of this. Nimish.
The entire PSU basket was in focus today, and there were technical reasons for stocks like REC and PFC to gain in today's trade. REC, I'm told by sources that because of the closure of the CPSE ETF, the mutual fund will have to buy close to 4 crore shares to complete the ETF for the investors. The reason being, given the fact that REC was completely sold to PFC, the government could not participate in the REC shares in the ETF. Similarly, for PFC, because of the arbitrage gains post the REC move, we've seen a bit of a pullback rally in the PFC stock as well. For other PSU stocks like Power Grid, IOC, BHEL, BAIL, not only it has moved up after the recent underperformance, but also the fact that now that the CPS hangover is over, there is some technical buying as well coming back into these stocks at the institutional desk. But clearly, the REC move was largely on the back of the fact that Reliance Mutual Fund will have to buy 4 crore shares from the open market to complete the ETF, which got closed last week. Back to you.
Now, Nimesh, thanks a lot for that. Actually, there will be a lot of questions on REC, especially after the way it shot up. But Nimesh has explained why it's a technical reason. The fund had to buy it from the market. So Mahesh Sawant has written to us from Pune with a question on REC, I think enticed by the rally today. He says he's been holding 200 shares of the company at 120 rupees each, and he wants to know what he should do.
I think it's a hold, according to me. I don't think it'll be too premature to book profits, because all the floating stock, the way it's kind of got absorbed eventually, it's only going to make things easier for people to sit on dividend yield and keep on riding the improvement in financials as we go forward in this entire sector. The sector is going through a restructuring, Lata, and the financial part of it will probably happen with a little bit of a lag. So I think the next 6 to 12 months will be much more promising. So for me, it's a hold.
Okay. He's in the money.
Yeah.
Okay, we move on to the 5th and the last headline then. The Nifty Junior and Nifty Small Cap indices underperformed the big headline indices. Both lost more than 1%. Metal stocks also tumbled in trade. The Nifty index, the metals index was dragged down by stocks like Vedanta and JSW Steel. Real estate stocks and bank stocks, both PSU and private, were some of the other big losers. ICICI Bank, Kotak Bank were the main culprits, contributing more than 60% to the Nifty bank losses.
Okay. So there's a question here from Raj Kumar Singh from Punjab. He has a question on JSW Steel. Says he has been holding 6,000 shares of the company, purchased at 386 rupees. Says he's a long-term guy and wants to know if he should hold or sell. Prakash, 386 rupees purchase price.
So, you know, for a
today
sector,
it is 278.
Yeah, it'll be really out of the money. And it's been, I don't remember when it was 386 last time. It's been a while. And the whole steel cycle, in spite of it being in a very robust stage globally and within the Indian markets, JSW Steel is going to take a while to, you know, really deliver. But if he's got a view which is, let's say, 5 to 7 years, as a sector, the cycles are slightly longer, but you could probably start seeing the benefit of this when the entire capacity that JSW has put together starts playing out, and which means a pickup in the domestic consumption as well as global headwinds being slightly positive. So if he's a long-term investor, doesn't need to worry. In fact, he could average out at 250, 260 zones, because that's the level where a lot of consolidation has also happened in the past. But I wouldn't look for a distress sell at this point in time or book out in terms of the significant loss that he would have. So stay put, average out if you have the money.
Okay. I'm just wondering if Arcelor also becomes one of the key players in India, going by the way SR story is, then there's a little more tight competition for the likes of JSW. But yes, expansions should still help. And he's just about 90 rupees out of the money. Maybe he can wait. There is another question. We told you that aside from metals, property stocks also fell, realty stocks. And there's a question from Dattatray Shinde from Mumbai. He has written with a question on Godrej Properties. Says he has been holding 53 shares of the company, purchased at 720 rupees. He says he's a long-term investor and wants to know if he should hold or sell. He's suddenly in the money, actually. I mean, Godrej Properties rose very sharply in the past few days.
Yeah.
If he can get maybe a 3-month of the stock, you will notice that he's distinctly in the money. So should he stay, Prakash?
Yeah, I think, again, you know, the revival in the real estate sector is going to benefit some of these leaner balance sheet players. So Godrej happens to be one of the best plays with an asset-light model. They go into JDAs rather than own land banks. They don't have debt to worry about. And the kind of inventory pickup that they've seen, particularly in the Bombay market, has been significant. And this is a pan-India player, mind you. It's not just Bombay that we get so restricted to. It's not just Vikhroli that Godrej is active in. And all the projects are in that mid-income dwelling, you know, segment. So it's not even luxury. It's not even difficult to sell. So stay put. Look at 4 digits, maybe, you know, a year's time, which is another 22-25% from here. And then maybe you could rejoice having bought into at a higher level as well.
All right. Thank you very much, Prakash, for answering questions from viewers. Thank you, Ashwini, as well, for being with us.
Well, it's a wrap on this edition of Markets Today Talk Back. From Lata, me, everyone on the team, thank you very much for watching. More coming up on the other side.